a lot about real estate. Now, the second commercial break, here is the trivia question, and it is famous phrases from TV shows or movies. And I know Mark's going to know this one. In this TV show, Jimmy says, "Jimmy's got the moves," and George says, "George is getting angry." I'm sorry, I crack myself up sometimes. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In this TV show, Jimmy says, "Jimmy's got the moves," and George says, "George is getting angry." Call 888-912-1190. Make sure to include your name, email address, and make sure that you speak slowly and spell out your email for us 1 letter at a time. And we will be right back. Good.
There's a mini Seinfeld episode, the first one they've ever done since they went off 10 plus years ago. It's on the web. I saw it the other. It's very clever.
The lost episodes?
It's not. It's part of. Seinfeld has a new thing he's doing, drinking coffee in cars with comics or something like that. It sounds like that. And his first episode was with Larry David, and it's hilarious. And they're just sitting in a restaurant talking the way those guys talk. But there's also an episode with Larry David watching TV, and he's watching a Seinfeld episode. But you quickly figure out that it's not an old Seinfeld episode, which is what I thought it was, because they start talking about iPhones and the internet. And Seinfeld went off the air pre-internet.
That's right.
When did it go off the air?
92.
No.
Wasn't it that?
No, it went up pre-iPhone for sure.
Pre-iPhone for sure.
Not here.
Yeah.
All right, we'll do the trivia contest, and then I'll come back to it. Oh, and then get into email time.
Email time?
Right.
Yes, indeed.
And away we go. Ready?
Ready.
Who's ready? Okay.
Kramer's ready.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host, Mark Hanf. And when we cut to the second commercial break, we ask this trivia question. In this TV show, Jimmy says, "Jimmy's got the moves," and George says, "George is getting angry." All right.
Seinfeld.
That is correct.
Indeed.
And Todd, you're still with us, and you said you wanted to win the Oops Award. Go ahead.
I did. My marketing folks would kill me. I gave the wrong website address for our Constellation project. The correct address is constellation@northstar.com.
Okay, excellent. And Mark, we have an email that we received from a listener that says, "What advantages do you offer compared to other lenders in your business?" You better explain that, because a lot of people may not know what they're talking about.
Indeed. Well, for new listeners, I am president of Pacific Private Money. We are a hard money lender, as we're called. Some people say private money now, but private money lender, hard money lender in Northern California. We're based in Marin County. And we generally make loans to real estate investors. So the banks, after the whole mortgage meltdown, largely stopped making loans to real estate investors, those who would maybe buy property to fix and flip, or maybe buying rental income property, or if they own investment property, pulling money out if you have equity is another thing that banks used to do a lot of, and they're just not doing that anymore. So at Pacific Private Money, we are answering the phones that pretty much are ringing every day from real estate investors who are looking to get into the market now that many people believe it's at least hit bottom, if not maybe in some semblance of a recovery, and are looking to make money in real estate. There are opportunities out there to either acquire rental property, because you can get a lot of rent for a lot less cost in this market. You can also buy fix and flip. A lot of people who are very handy have been doing that for the last couple of years in this market and making some good money. And so at Pacific, we're one of maybe a couple of dozen noteworthy hard money lenders in the Bay Area who are active and in the market. And gosh, why would you come to Pacific? Well, you get to talk to me.
There you go.
And I come from a real estate development background. So for 20 years before I got into hard money lending, I worked in a family-owned development company. So I was on the other side of the table from lenders, and we borrowed a lot of money. We did a lot of real estate projects, and we worked with contractors and rehabbers, and And so I speak that language, whereas and a lot of my peers who are also lenders come from either mortgage loan origination or from banking, and they tend to just kind of have a different approach and maybe attitude. And I just I don't know. I think I am easier to speak with than some of my peers. I think at least that's the feedback I get from a lot of callers.
Well, the feedback I get is that you're honest, and I've known a lot of hard money lenders who are not honest. To me, that's the biggest advantage of dealing with
I
you.
do hear war stories from people who oftentimes will call when they're literally days away from having to close, and they were working with another hard money lender, and they were made certain promises, and those promises were not kept. So it's bait and switch is unfortunately really prevalent in our industry, and so promising a rate and a certain amount of fees, and then coming back when they know the person is running out of time, the borrower that is, who maybe has to close escrow or lose his deposit, and then all of a sudden saying, oh, well, my lender wants another point or two, or I got to bump the yield up, and just, I really hate that. I just don't think that that's fair, and so I really try, as much as I really love my private lenders, the people who fund my loans, I want to take care of them because they're the source of my business capital. But on the other hand, I also really like my borrowers too. I like repeat borrower clients.
Sure.
And the only way you get
Experience.
repeat borrower clients is to treat them well, and to give them
yeah.
good pricing and good service, and not do the bait and switch. And so we're really a matchmaker between people with money who are looking to lend that money out in a secured fashion and get high yields for it. A lot of people lend from their IRA, or they'll lend for their trust savings, and this is a great way to boost the yield that you can earn with your savings or your IRA monies by lending it out, secured by real estate. You can get anywhere from 8% or more fixed annual interest returns paid monthly. So it's a great way to do that, but we also want to match them up with borrowers who've got got at least a track record, or they've got good credit, or something about them. Their lender profile is positive, and they've got a good exit strategy. They've got a good business model for basically what are you going to do with the money? How are you going to utilize that money, and how are you going to pay the lender back? How are you going to pay my lender back? So
Well, one of the things I was going to say is that when you were mentioning about the interest rates, is that one of the things that sets you apart from a lot of other lenders too is that you pay your lender clients a very good rate. And a lot of times other lenders aren't doing that. So you're really fair to your borrowers. Don't bait and switch them. But then also from your lender investors, you give them a good rate of return.
Well, we do, because there are private lenders out there who try to capture a rather large servicing spread, as they call it, the difference between the note rate, what the borrower is paying, and what's called the sold rate or the sale rate, which is the rate that the investor gets. And it's not unusual if you go through another Bay Area private lender, they may only pay you 8% but loan that money out at 10. Whereas at Pacific, we generally solve for maybe 0.5% to 1% servicing spread. So we're not quite as aggressive as some people out there, and so we're trying to really toe the line between getting the best pricing for the borrower client, but providing a fair and quite compelling return to our lender client.
Yeah, especially in today's market.
Oh my gosh, we're in a
any
zero
questions?
interest rate environment.
Yeah.
Get 8 to 10% on your money. Are you kidding me?
Yeah, exactly.
Yeah.
Todd, any questions for Mark?
Well, no, it sounds like, Mark, you have good business ethos, which I agree is very important. It's certainly something that's kept us around for 25 years as well. Have you seen any kind of change in where the business you're finding is taking place? Is it, in Marin County, San Francisco, are you seeing any changing dynamics? Are you being pushed further out in terms of where the opportunities are for investors?
Well, we actually do more loans in outlying areas of the Bay Area because the opportunity for the real estate investor is not so much in Marin or San Francisco, where you didn't have the price drops you had in other markets. But let's say East Contra Costa County, for example, is a great example. I mean, they built a tremendous number of new houses out there off of Highway 4 in Pittsburgh, Antioch, Brentwood, Oakley area. And a lot of those homes, newer homes that were built in 04, 05, 06, they sold for anywhere from $600,000 to $800,000, and they're now trading at $300,000 to $400,000. So they literally had a 50% price dip, and so there's opportunities out there to buy foreclosure or short sale opportunities and pick them up at a good price and rent them out at a price that makes sense. Or if you can get a good enough deal, oftentimes maybe via a short sale you can actually flip that property and maybe make a quick $10,000, $15,000, $20,000.
Okay. We are going to, how do people get a hold of you?
Oh, sure. Website, PacificPrivateMoney.com. That's our borrower website, PacificPrivateMoney.com. And if you're listening out there and you've got cash savings in your IRA or in your savings account burning a hole in your pocket, you don't want to put it in the stock market, you want to get a nice high fixed yield, try our investor website, which is PacificPrivateInvestments.com. That's investments plural, PacificPrivateInvestments.com. Or you can call our office anytime at 415-883-2150.
You can also go to bestofinvesting.com website and see Mark
Absolutely.
there. Okay, we're going to cut to our third and final trivia question, commercial break. In what movie might you hear the main character say, Lieutenant Dan? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. You don't have to write that down. You know that answer. Call 888-912-1190. That's 888-912-1190 to answer this question. In what movie might you hear the main character say, Lieutenant Dan? Make sure to include your name, email address, and remember, please speak slowly and spell out your information for us one letter at a time, and we will be right back.
Indeed.
Indeed. Everyone knows the answer to that one?
Forrest Gump.
Forrest Gump.
You're making it too easy.
Gotta be.
Oh yeah, that's what he said. Yeah.
So what are we talking about in our final segment?
I was thinking about just what's going on in real estate. Also to touch on the second home market, kind of just what's going on.
All right. Final segment.
Thanks for sticking around.
Of course, enjoy it.
Okay. Ready? Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with my famous co-host, Mark Hanf of Pacific Private Money. When we cut to the third commercial break, we asked this trivia question. In what movie might you hear the main character say, Lieutenant Dan? And that would be?
Forrest Gump.
That's right, because Mama always said, life is like a box of chocolates.
We're still talking about chocolate now.
Still chocolate.
Good,
That's a good
square.
It's on your
That's what
mind.
it- That's still on my mind.
I know I'm going to Powell's after this.
Yeah, chocolate is always on my mind. Just like Georgia is always on my mind.
Georgia?
Yeah, no, mine's chocolate. And let's see, Mark, what is going on in real estate? And we'll also talk about second homes because that's part of real estate too.
Well, anybody who's a real estate investor out there right now looking to get in on this market, I'm hearing a lot of frustration because it's kind of like a light switch. We were just talking about it off the air. In the fourth quarter of 2011, real estate investors were having a real tough time selling the properties they had bought to fix and flip, as were homeowners who were in distress. I mean, just sales in general in the fourth quarter in 2011 were just horrible. I mean, nothing was moving and the prices were falling. And then, here comes 2012, first quarter. Nobody really knew what 2012 was going to look like. I mean, we were all hoping it was going to be, maybe we were going to hit the bottom of the market and
Kind of bounce back a little bit.
Yeah, because that's what we were predicting in the beginning of 2011. And of course, that did not happen in 11. We never saw the spring kind of flurry of activity. Well, spring of 2012, and what starts happening is the real estate investors who were waiting on the sidelines, they all started coming back out of the woodwork again. And like a light switch, all of a sudden, not only are homes moving, but they're now getting multiple offers. And
Well, now, are the banks loosening up with credit, or is it people's confidence?
well, I think it's really it's a supply and demand thing. You've got more demand, you've got more people coming into the market, deciding that, well, okay, if housing prices, aren't going to fall any further, then now's the time to buy. So, in 2011, the reason people weren't buying is because the newspaper articles were still predicting further price depreciation over the coming 6 months. So it's like, if you think prices are going to be lower in 6 months from now, you ain't buying today.
No, but if as soon as the confidence turns around, then people start buying.
And the
That's
challenge,
what the main
yeah, and so what's really added to the the lack of inventory is the fact that we're still waiting for the banks in 2012 to kind of pick up the pace of foreclosure. There's still a lot of shadow inventory out there, shadow inventory being those folks who are upside down in their homes and not making their payments, or just not making their payments in general, the number of homes that are in some form of foreclosure, yet the banks have not actually physically foreclosed on the property. So there's that inventory is still really, really high, and so the banks, for whatever reason, whether it be robo-signing or just politically incorrect to do so, they're really not foreclosing at a pace that they should be foreclosing, so that we can clear through that non-performing real estate.
Yeah, because you wonder if there's going to come a point where the market kind of turns a little bit, and it's just enough for them to just flood the gates with inventory.
Well, and that's what that's what really nobody really knows. I mean, I've not talked to anybody with a good crystal ball. I mean, very few people I talk to believe there's going to be any kind of second or third wave or any kind of tsunami that hits the market again in terms of new foreclosures. So I don't know, I don't see that happening where we would have then prices maybe going back down again. So I almost tend to believe that what we're experiencing now, which is stabilization and in fact modest price increases in certain markets, I mean we could have really turned the corner, and that I wouldn't assume, if I were a real estate investor, that prices were going to come down again.
Okay. Well, Todd, you're not in the primary real estate; you're more in the secondary real estate. What are you saying?
But I would agree with Mark. I think we're, especially in Northern California, we've approached a level of stability here. And when you look at how prices in San Francisco, for our Fairmont Heritage Place at Ghirardelli Square project, year over year, the median price is up, I think, 6%, which is pretty incredible when you look at the macro. And so what that really does is